Hello everyone, welcome to today's video where we'll be talking about the upcoming earnings from the US tech sector, which is in focus this week. And we will mostly, we will actually talk about Meta platforms, Apple, Amazon, and Alphabet, once again as they release their latest quarterly results this week after a very tough 2022. It is today, Monday, January the 30th, 2023. This is your host, Nikos Zabouras, Senior Market Specialist at FXCM. Before we begin with our session today, please read carefully through the disclaimers and then we will get started. Please go through carefully the disclaimers and the risk warning. Okay, so let's get the ball rolling. As we said, it is a very busy week for the US tech sector as we expect big names from the industry, starting on Wednesday with Meta platforms, formerly known as Facebook. And then on Thursday, we expect the results from Apple, Amazon, and Alphabet, formerly known as Google. Of course, these also form, along with Netflix, the group that is often referred to as FANGs. These are 4 of the 5. Netflix has already reported strong financial results for the fourth quarter. We have already talked about that. Today, we will focus on the 4 that you see. Here, we'll talk a little bit about what has transpired during the previous year, and as we have already started 2023, and then what to expect from the earnings report and the earnings call, some things that will be in our radar. Now, as we've already said, 2022 has been a very bad year for the tech sector. High interest rates and high inflation is an environment that is negative for Wall Street in general, but is particularly detrimental for the tech sector and growth stocks, as high interest rates eat into future earnings. Many of those companies are unprofitable, and that is not a good environment for these companies, need loans and all that stuff, whereas high inflation makes their products more expensive and also shrinks the disposable income of customers. And for better or worse, many of the services and products they offer, these companies offer, are not always necessary. For instance, someone can live without the latest iPhone. Of course, the tech industry has come under increased regulatory scrutiny over the past few years, and definitely under the current administration in the United States for anti-competitive practices, but not only in the US though. So in one of the latest such developments, the US Department of Justice filed a lawsuit against Google for using anti-competitive practices in order to control the digital advertising market and diminish the threat to its dominance. Elsewhere in the UK, regulators are probing Amazon, Microsoft, and Alphabet for their cloud computing business. The European Commission found Meta in breach of antitrust rules by distorting competition in the market for online advertising. So overall, just referencing some of those points in order to make this point of how they have come under more, let's say, inspection. A recent report by CNBC that also drives this point home showed that, again, according to a CNBC report earlier in the month, This report showed that Apple's lobbying spend increased by the most last year compared to its counterparts, to more than 9 billion. 9 billion it spent for lobbying. But of course, Amazon was still on top again, according to a CNBC report, with nearly $20 billion spent for lobbying. Of course, other factors that created this negative backdrop for the tech sector is trade disruptions in general, supply chain issues. The war in Ukraine, COVID outbreaks in China have all created production and distribution problems. Back in November, for example, Apple said that COVID restrictions in China had impacted the production of its iPhone 14 Pro and iPhone 14 Pro Max, and that would lead to lower shipments. So that just an example of that. And of course, all these headwinds have also led big tech companies to reduce their workforce. Apple has avoided this until we haven't seen any public information of this sort, but Meta announced 11,000 layoffs a couple of months back. Amazon earlier this year said that it would fire 18,000 employees after another round of job cuts last year, and Alphabet said that it will let go of around 12,000 people. So these are some factors that have that sort of make this point of the tough environment that the tech sector faced in 2022, and of course this reflected into their stock performance. You can see here that although Apple was the least bad performer, let's say, it still had a very bad year with a drop of 27% for its stock, AAPL.US, in 2022 compared to the previous year, of course. And these are based on prices derived from FXCM trading station desktop platform. So let's actually take a look at the charts here and talk a little bit more about the stock performance. Of course, one of the worst performance last year was Meta Platforms, 64% loss. The metaverse, which loses money, and we'll talk about that more, and the companies focus on that. Negative media have all this, along with all the other factors that we have said, have all attributed to this slump. In November, the stock dropped to the lowest since 2015. However, it managed to post profits since then, and it's off to a strong 2023. Now, Apple, which, as we said, AAPL.US, didn't do that bad, still closed the year in bear territory. Bear territory is usually defined as a more than 20% drop from a recent peak, and that peak in this calculation was the all-time highs it had set earlier at the start of 2022. But it also has a profitable month so far. We see some recovery in the tech sector, mostly driven by prospects for a less aggressive Fed and a pivot and even cuts. That's what market expect towards the end of the current year, despite the hawkish stance. Now, Amazon lost around 50% last year, erased its pandemic gains. So the tech sector in 2020 around March slumped, but as the pandemic broke out, but then skyrocketed to record highs. Now Amazon erased those gains and actually started 2023 with 3-year lows, but heads towards its first profitable month since July. And Google, of course, did not do very well either, nearly 40% decline last year and set 2-year lows in November. So this sort of sets the tone of how these companies have done. And of course, not to forget that the whole FANG's stock basket by FXCM said more than 40% last year. Now let's go back to our presentation and see what we expect from those companies. Now, here we have listed revenues and earnings per share estimates as referenced on investing.com with the data taken today. Again, these forecasts are from investing.com. Of course, some of those have actually posted their own outlooks. So you can see those figures here. So Meta, in its own projections, talk of revenues in line with what we see in investing in the region of 30 to 32.5 billion. Those figures would mark an increase sequentially. These are for the to be reported quarter, the fourth quarter for most of those companies, first quarter of fiscal year 2023 for Apple. And however, Meta's figures would be below the year ago period, which were in excess of 33 billion, close to 34 billion. Apple, as we said, Apple is the first quarter of fiscal year 2023. Those figures would mark a return to above 100 billion sales for the first time since the year ago quarter, when it had posted record revenues of nearly 124 billion. Now for Amazon, these forecasts here would set all-time highs. They would exceed the year ago revenue of $137.4 billion. The firm's own projection puts revenues in the 148 billion range. I'm mostly focusing on revenue, but you can also see the earnings per share on the expected earnings per share on the right column. And for Alphabet, again, we would have record highs after the ones set a year ago. Of course, we need to remember that the soon to be reported quarter, this for the quarter ending in December, it's typically a strong quarter because it's a holiday season. So for people that sell products, physical products, or other services, it's usually a good quarter because people tend to spend for the holidays. And of course, it includes the Black Friday promotional periods. In general, we have seen many promotions from retailers and others during the last few months. Now, of course, other than the revenues, there are other things that we will be focusing on during the release and the relevant earnings calls. Of course, it's not a very in-depth look as we try to take a look at various companies that do various things, even though they all belong at the tech sector. They also have other business. They have many aspects actually that they deal with. Now, other than revenues and EPS, we will be looking at the broader financials of those companies. Margins, net incomes will be in the spotlight. Amazon, for example, returned to profits in the third quarter, the previous quarter, after 2 straight losing quarters, which had happened for the first time since 2015. Meta's profits had slumped on a yearly basis in the previous quarter, while operating margins were squeezed, even though they were quite healthy. Now, ad revenue from advertising is quite important for some of those companies. For Meta platforms, for example, this is the main source of revenues. Almost all of those revenues come from ad sales. And it had dropped to a little over 27% advertising, a little over $27 billion in Q3 for Meta, advertising revenue that is, from above 20 billion in Q2 and Q3 2021. CFO Dave Wenner during the last earnings calls had talked of the adverse impact on revenues due to weak advertising demand. So underwhelming demand is one factor for that, and uncertain and volatile macroeconomic landscape. Alphabet saw a sequential drop in revenues from Google advertising and YouTube ads in the third quarter, and its CFO had talked of further pullbacks in advertising spending, expecting further pullbacks. Amazon began disclosing ad metrics for advertising only a year ago, and in the last quarter, they generated nearly 10 billion in revenue. So advertising revenue will be in focus. And of course, the cloud business. Amazon Web Services is the biggest player here. And the segment is always one of the bright spots in recent reports. Revenues have been increasing over the last quarters, exceeding 2 billion in the last reported quarter in Q3. Google, of course, has much lower revenues for this department, but again has been doing well, although the segment operates at a loss, and it will be interesting to see how it fares this time around in terms of profitability. Of course, there are other things we will be looking for. Meta's narrative on the metaverse, for instance. It's clearly that the metaverse is not there yet. The company is doing leading work, and this could well be the next big thing, but it's not there yet, that's for sure. And the segment, the responsible segment for delivering the metaverse is operating at a loss. Last quarter, it lost 3.5 billion. It is a money pit, and it has been a concern for investors. Now, other factors, for instance, for Apple, we will be interesting to see sales how sales of its products went segment by segment, mostly, of course, the smartphone market. Now, according to Canalys, the last report from Canalys, global smartphone shipments fell 17% in the fourth quarter, although according again to the recent report from Canalys, Apple reclaimed the top spot from Samsung in the fourth quarter with a market share of 25%. So that's pretty much it ahead of this week's earnings from big tech and the companies in specific that we talked about. We tried to bundle together many different aspects, so it wasn't necessarily a very in-depth review of every company, but we tried to drive from to set the backdrop and talk a little bit more extensively about some things that we will be looking forward ahead of this week's earnings releases. That's it from me. Thank you for joining me.